My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends, try to make you some money. My job is not just to entertain, but to educate, teach, put in context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. For most Americans, this pandemic-induced depression is a terrible crisis. But for many tech companies, a crisis is a terrible thing to waste. And that's why the tech-heavy NASDAQ can rally 0.43% on a day when the Dow tumbled 226 points and the S&P backslid 0.38%. Sure, the tech titans aren't exactly crowing about it. That would be in bad form. But when you look at their numbers versus the numbers for our overall economy, GDP down 9.5% in the second quarter, nearly 33% on an annual basis. Let's call that the worst ever. Along with 17 million continuing jobless claims. It sure feels like the old economy's loss.
The house of pain
is the new economy's gain.
House of pleasure.
At the very least, the companies involved in the internet, the cloud, and communications have gotten a massive windfall here. Remember, digitization pulled through by 2, 3, 4, 5 years. Look at that incredible $7.4 billion revenue beat Amazon reported after the close. They're practically printing money out there. They're like the Mint, the Amazon Mint, because people don't want to put themselves at risk by shopping in person when they can buy just about everything they need online. Amazon is the answer to the pandemic. Every day, some pundit or portfolio manager comes out here and argues that the Federal Reserve is propping up the economy by keeping interest rates low and effectively backstopping low-quality corporate bonds, which then props up all of our stocks. They tell us that it's a bubble. They tell you to ignore it. They imply the gains in the stock market are fake. They're chimerical, and the whole thing will end in tears. You hear them. I hear them. It's driving me nuts. These typically incredibly rich naysayers give you no alternatives whatsoever. I mean, they're not helpful. They throw their hands up and they say everything's dangerous. What does that do for you? Many of them are money managers who've missed out on a huge run. They need the market to go lower or else their funds will go out of business. Multiple times today, I heard that stocks were dangerous because of the Fed, and you had to be delusional to own them. And it wasn't fair, like the banks won't take the money if you sell it. Meanwhile, they say bonds offer no value. They're probably right about that. Gold's too precarious, wrong, and real estate's a loser, wrong. When it comes to the stock market, though, they couldn't be more really wrong. Forget the word bubble. It's a market where some very large tech companies are making fortunes because they are great at what they do. I am not Bambi. Never been confused with that, or Thumper for that matter. I know these companies play tough, but the fact is their stocks reflect the worth that they have created. And all these jeremiads have been thrown out against these companies for a myriad of points that you have missed because those people who are so rich and so smart must know more than you, so you're not going to buy the companies you use and watch and love and admire every day of your life. And it's not like these stocks were hard to find. I mean, we've been pounding the table on Amazon, Apple, and Facebook for ages on this show. There's some of the marquee names in the Cramer COVID-19 index, and they have been rock-bed important positions for my travel trust for years and years and years and years and years, as club members of Action Alerts know. We can throw up our hands and cite the Fed, or we can ask, is there anything more obvious than buying Amazon when the government's telling everyone to stay home? Got it? Honestly, this isn't even specific to the stay-at-home economy. When I'm searching for long-term investments, I dream of finding companies that, what am I looking for? What am I looking for? I'm pacing and I'm looking for companies so powerful. I'm looking for companies that are so strong that they end up being hauled in front of Congress for destroying their competition fair and square. Guess what? We had the greatest stock-picking research firm in the world yesterday. It's called the House Subcommittee on Antitrust. They identified 4 of them for us yesterday: Alphabet, Amazon, Apple, and Facebook. They couldn't identify Microsoft? Is that so hard to put on the recommended list? All 4 fielded questions after questions about how they wrecked their competitors. I think they gave a good account of themselves, although that's really beside the point. Congress told you these companies have an absurd amount of market power. And it just so happens that they have an absurd amount of market power. And all of them reported after the close today and showed you their absurd amount of market power. Amazon, Apple, and Facebook each knocked it out of the park. And I think Alphabet did well. They're just not very good at communicating their story to Wall Street, to be mild about it. You could argue these tech companies are so powerful because they know how to invent and then reinvent and then reinvent again. And yes, in some cases, copy their competitors and come out on top if they come up with something better. You could argue that their scale gives them a huge unfair advantage. From a stock picking perspective, it's the same thing. Most of all, they've proven that they'll never let a crisis go to waste. Listen to these spectacular numbers. Amazon made nearly $89 billion in revenue. Street was looking for $81.5 billion. That's how you translate into a gargantuan $10.30 of earnings per share. Analysts were looking for $1.46. And they weren't even trying to have an incredibly profitable quarter. They spent aggressively to build capacity for the stay-at-home economy and to keep their employees safe. Billions of dollars in that. As for the next quarter, Amazon gave you a blowout forecast. Stock's on fire. All right, how about Apple? All right, this is another blockbuster set of numbers. They did $59.7 billion in revenue. People were looking for about 51. $7.5 billion more than the analysts expected. They did, along with a 51-cent earnings beat off a $2.07 space. This is the largest company in the world, people. iPhones, iPads, Macs, the service revenue stream, accessories, all stronger than expected. iPhone numbers were truly magnificent. People were worried that they wouldn't sell this quarter because of the lockdown. Instead, they did $26 billion in sales. Wall Street was looking for $22 billion. And while Apple didn't give us a forecast for the next quarter, they did give us something that I know is truly regarded as leisure demand by some people, let's just say, but I think is important. They gave us a 4-for-1 stock split, which should make this one a lot more enticing to home gamers who might be scared away from a $4 price target. Many other companies should actually watch what Tim Cook does here and stop watching what Warren Buffett does. Do what Tim Cook does. It's another reason why Apple's zooming after hours. You know me, I haven't changed my mantra. I say, Apple, own it, don't trade it. That's like my middle name these days, okay? Own it, don't trade is my middle name. Facebook. After all the sturm and drang about major advertisers boycotting the platform, Facebook shot the lights out, as I told you that they would. Big revenue beat with sales up 11% year over year. Enormous 41-cent earnings beat off a $1.39 basis. Daily average users up 12%. That is stunning. Even better, July is going strong. Millions of small businesses need Facebook. Instagram Shops is a gigantic hit. This is a small and medium-sized business juggernaut. No wonder the stock's flying in after-hours trading. They create a lot more companies than the SBA does. Alphabet's more tricky. Numbers were substantially better than expected, even as their core advertising business took a major hit. Still, YouTube managed to grow by 6%. The phenomenal Google Cloud, that was that Thomas Curry I told you about, up 43%. Stock barely budged in response, but I think that's because Alphabet's management is so non-promotional. No, they're worse. They are anti-promotional. They should go work at Moderna. Put it all together, and 3 of the 4 companies that Congress grilled yesterday just reported unambiguously fabulous quarters that have sent their stocks in the stratosphere. The 4th one did pretty darn well, even if its stock only rallied a little. If I were out there on the conference call, believe me, I would be a little more, let's say, aggressive. Talk about an incredible track record. That antitrust subcommittee, the heck with everybody else. For the heck with the index funds. I want to do whatever they tell me to do. Here's the bottom line. These big tech stocks have been roaring because they either benefit directly from the pandemic or they figured out how to thrive in spite of it. That is not a Fed-mandated bubble. It's some very well-run companies making lots and lots of money for you shareholder. Call me crazy. Call me bipolar. You'll hear about that later in the show. But when you keep delivering massively better than expected numbers, I think it makes perfect sense for your stock to go higher. I'm searching for what to call it. How about the American way?
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.